Thinking about buying a 2, 3, or 4 unit property or helping a client who is, multi-unit homes can be a fantastic way to build wealth and reduce your personal housing costs. But qualifying for a loan on one of these properties comes with specific rules, especially when it comes to rental income and something called the self-sufficiency test. So today I'm breaking down exactly how rental income works for qualifying, the additional criteria for 3 to 4 unit homes, and how to set yourself up for success. Let's dive in. If you're planning on buying a 2 to 4 unit property and planning to live in one of the units, you can use the rental income from the other units to help you qualify for your mortgage. But it's not as simple as just adding rent to your income. Here's how it actually works. For purchase transactions, lenders will use the lower of the following two calculations: the monthly operating income reported on either Fannie Mae Form 216 or Freddie Mac Form 998, or, much more commonly, 75% of the lesser of the fair market rent determined by the appraiser or the rent amount stated in the lease or rental agreement. So the key takeaway here is that lenders apply a 25% adjustment to account for vacancies and maintenance, so you're qualifying with 75% of the rental income at best. If you're buying a 3 or 4 unit property, there's an extra step involved. Lenders require the property to be self-sufficient, meaning the rental income must be enough to cover the property's total mortgage payment, PITIA, principal, interest, taxes, insurance, and association dues. Here's how they test for that. It's called the self-sufficiency test breakdown. 1, you take the appraiser's fair market rent of all units, including the one you plan to live in. 2, you subtract the greater of the appraiser's estimate for vacancy and maintenance, or 25% of the total market rent. And then 3, the remaining income must be equal to or greater than the full monthly PITIA payment. Again, principal, interest, taxes, insurance, and association dues. So let's cover an example of this. So let's say you're buying a 4-unit property with a rent of $1,000 per unit or $4,000 total. 25% of the $4,000 is $1,000. $4,000 minus $1,000 means you have $3,000 of usable income. So if your total PITIA is $3,000 or less, you pass the test. If it's more than $3,000, you'll need to bring more money to the closing table to reduce the loan amount or lower the payment in some other way with like a rate buy down or something like that. So please note, the rent from the unit that you're living in does not count towards qualifying income, but it is used for the self-sufficiency test. On top of income requirements in the self-sufficiency test, there's a couple more things you need to show lenders. 3 months of reserves after closing are a big one. So these are funds you have left over after you've bought the property. It must cover the full 3 months of PITIA payments. And remember, gift funds are not allowed to meet this requirement. It must be your own money. This is a safety net to prove that you can cover the expenses if the rental income slows down temporarily. 2 to 4 unit properties are one of the smartest ways to build long-term wealth, especially for first-time buyers. You get to live in one of the units, your tenants help pay for the mortgage, and you build equity and gain experience as a landlord. But not understanding the lending rules can lead to surprises, delays, or even denied loans. Knowing how to calculate qualifying rental income and understanding the self-sufficiency test can make or break your success with these type of purchases. So if you're considering buying a multi-unit property, here's what you need to do. Start exploring neighborhoods where multi-units are available and affordable. Next, get pre-approved with the lender who understands 2 to 4 unit financing. Next, gather the lease agreements or rental estimates if you've already got them. And then finally, run the self-sufficiency test early so you know what you're working with. Want to know if a 2 to 4 unit property is a smart move for your financial future? Book a call with me today. I'll help you break down the numbers, run the self-sufficiency test, and see how much rental income can help with your qualification. And if you found this helpful, hit that subscribe button for more mortgage tips and home buying strategies. Click the link below, schedule a chat, and let's make your multi-unit dream a reality.